Good Monday evening, everybody. I know I just did a video yesterday, and you probably are already sick of hearing from me this week. But after I finished my little blog update this morning, and the news broke about this obscure family office hedge fund, I don't even know how to pronounce it, whether it's Archegos, doesn't matter. I did a piece earlier with Yahoo. That was the focus, and I'll certainly share that shortly with you. But I think it's important, if you haven't heard the story, to get it without, well, I shouldn't say without emotion, because I always throw some emotion into this, but this small, by small, I mean low $1 billion family office. Family office is just a fancy word for it's my money and I let some of the people in. It's a guy who used to work for a hedge fund monstrosity called Tiger Management, and he clearly made a lot of money on his own. And essentially, he was over levered. What does over levered mean? That's over levered, over borrowed, over leveraged. What we learned today was that a number of prime brokers or brokerage firms like Morgan Stanley, Nomura, Credit Suisse, Goldman Sachs, what a shock, gave this guy borrowed money. I'm hearing anywhere from 7 to 10 times leverage. That means if he puts up $100, they let him control $700. Put up $100, control $1,000. That's leverage. Similar to what happened in the mid 2000s when the George Bush led SEC allowed 5 investment banks to lever their capital 40 times, 40 to 1. And then we were surprised when Bear and Lehman went bye-bye. In any case, this Archegos, it seems like this guy was putting a lot of eggs in the basket of media stocks, Viacom, Tencent, Discovery. And these stocks have seen meteoric rises, no surprise. And everyone was crediting the Reddit crowd, that David versus Goliath crowd. And I kept saying, no. It is absolutely not only here, but GameStop and AMC as well. There may be people on Reddit, which I think masquerading as some kid in the basement pumping up a stock, but I think it's really hedge fund people and perhaps some family office people. And this certainly smacks of that here, but topic for a different day. In any case, it seems like this one person, Bill Wong, had a bunch of stocks, and he got leverage from a whole bunch of investment banks, and he ran these stocks higher and higher and higher. But the reason why, here's the key. What happened was he didn't just buy the stock like you and I would buy shares in XYZ company. He did it supposedly in what's called swaps, SWAP small s. And swaps are a way where you can leverage your investment with the brokerage firm, but it's not public. There's no transparency. It's very hard to figure out who owns what. It's between you and the prime broker, you and the brokerage firm. So this guy somehow created these massive positions in stocks like Viacom, Discovery, Tencent, with all these investment banks, investment firms, brokerage firms, however you want it, prime brokers, what they really are. And he did it a lot on swap, which made it really hard to figure out who owned what. And they gave him all this leverage on top of it. 7 to 1, 8 to 1, 9 to 1, whatever it is. That's obscenely irresponsible leverage. I mean, this is off the charts crazy. So I'm going to share my screen. I just want to show you what happened in. So here's Viacom. And as you can see, from the crisis low last March at roughly $12, Viacom goes up to $100. Viacom owns CBS. This is Sumner Redstone, may rest in peace, conglomerate. This is a monster company. But look what happened in 2021. The stock goes from 35 to 100 and change. The key date was right here. Viacom brilliantly decides to do a secondary offering. In other words, they sold more stock to the public because the stock was at $91, up from $12. That was what you do. That's a brilliant way to do it. And I'm just purely guessing that the next day when it opened, they priced it at 85. This may have been the straw that broke Bill Wong's back at Archegos, whatever you want to call the firm, the pillar of irresponsibility. And Viacom then proceeds to go down to $45 a share today. Word got out Friday when brokerage firms, there were margin calls where his prime broker said, hey, Bill, we need more money, and you have an hour or 2 or 3 to get us that money. Oh, you can't get us that money? They hit sell. That's Viacom. Discovery, same thing. Discovery goes from, what was it? Let's call it $16 to $80. And the same thing happened there. No secret there. And Tencent, which we used to own, was a $5 stock. I think we sold it in here around the mid to upper 20s, which I thought was a great sale. First, but what do I know? And same thing here, stock was $32. I was commenting on this last week because I was looking to buy 10 cent back into a pullback, and all of a sudden I see this day and I go, wow, something is not right on this day. Stocks never do that unless someone is forced to push a sell button. I'm thinking, who the heck would have 10 cent? I didn't match up 10 cent with Viacom or Discovery. I just looked at 10 cent and said, geez, something's not right. And then the next day I said, oh my gosh, another 10%. And then finally on Friday, you saw some buying interest come in as brokerage firms were shopping all these huge blocks of stock. So let me just stop that. In any case, this is going to be news for a while. So if you want to know what's going on, that's what happened. I found it funny that there was a compliance person on one of the financial programs this morning talking that the SEC isn't regulating firms like mine enough. When's the last time you heard of an RIA firm blowing up and taking down the market with it? I would say I'll sit and let you think about it, because the answer is I can't find one. So where the blowups come? They come from either brokerage firms, Wall Street firms, hedge funds. So think about it. In 1990, Drexel Burnham Lambert, they blew up the junk bond market. Payne Weber had money market funds that broke the sacred buck, broke the dollar. They had to inject money to save those. In 1995, Nick Leeson and Barings blew up in London. 1998 was the big one, long-term capital, 20% decline in the market, 99-to-1 leverage. Wall Street gave those masters of the universe 99-to-1 because they put on trades that were only supposed to blow up once every million years. In what else? 2006, Amaranth, natural gas trades, blew up the hedge fund. Bear Stearns had 2 hedge funds in July of 2007, blew up, and then Bear Stearns blew up itself in March of 08. What else happened in 08? Lehman blew up. Oh yeah, and Bernie Madoff blew up in 08. The list goes on and on and on. I think you get my drift. These things have become all too common. The problem is not that the SEC is not regulating firms like mine. The problem is that firms that blow up many times aren't regulated enough. There's no transparency. They find ways around the regs. They skirt the rules, if you will. So it's crazy. And it's going to happen again, again, again. When does this stuff happen, you ask? When we have epic greed and euphoria. That's when these things happen. Traders and hedge fund managers think that it's their genius, not the market, that's giving them all these opportunities and insane returns. So they go and they traffic a little bit more and a little bit more and a little bit more toward the irresponsible side until they get fully, grossly, disgustingly irresponsible, bordering at that time on breach of fiduciary responsibility, and then going way over into full breach of fiduciary responsibility, bordering on things that are criminal. So it clearly is time that something is done. The problem now is you had the GameStop, AMC, Reddit situation that forced Congress's hand to have those hearings. And now I'm afraid the Congress gets involved again. This should start at the SEC, not at Congress, because most of the Congress people do not know common stock from livestock. And that is true. When I hear the questions they ask, I scratch my head. They're reading off a paper that someone prepared for them. They have no idea what they're talking about. In this case, it's the swap market, which is not a regulated market. They should move swaps behind this cloak of secrecy and bring it onto an exchange and make it with full transparency. You want to give someone that leverage? You want to let us find out who owns what? So what happened with this guy, and all of his prime brokers, all the sleeves he was investing with, couldn't happen again. No prime broker knew Bill Wong was going with all these other firms as well. So the swaps market, frankly, as I said on Yahoo today, it feels like the old Wild West. And eventually the Wild West got tamed. And I think in this case, it has to get tamed as well. I'm sure individuals and professionals lost a lot of money here. And this was not fly-by-night. I mean, Viacom is not a fly-by-night stock. So, I mean, frankly, it's enough. In one man's humble opinion, it's enough. They've pushed the envelope. It's complete and utter gluttonous behavior. It's beyond irresponsible, and something's going to get done. My fear is that the pendulum's going to swing from over here, not stop in the middle, but go all the way over to the side. And that's what you worry about when Congress gets involved and when the issue becomes so populist that it's going to be on perhaps, the nightly news on on CBS, NBC, Fox, and ABC. So if you're wondering what happened, that's what happened. If you have questions, you can always email me, paul@investfortomorrow.com. Always happy to have a discussion and unpack this further. If you like the video, as always, I ask that you give me a thumbs up on YouTube. And I'm going to try not to come back to you again with another video this week. I'm going to try hard. Let's hope the market cooperates. As it is Monday evening, I will say, let's go Huskies. UConn women play tonight for a trip to their, I can't remember how many, the Final Four in a row. 11th, 12th, a big one. So big game against our rival Baylor. Let's go Huskies. And I look forward to catching up with you all soon. Thanks.